Chief Tim Cook set to head to Beijing later this month to meet with high-level government officials, and the meeting comes at a crucial time because Apple has been facing revenue setbacks in China, which has been its most important overseas market. Following word that Cook would be making the trip later this month, Apple shares falling for a third day in a row, on track for their lowest close in nearly 2 years. As this number you're looking at $92.54, down about 0.75%, looks not great considering the stock had been higher by 120 in the past year. We should tell you that earlier today it hit $91.99. So it's been a little bit of a problematic time, or you could see it as a buying opportunity. Now, despite today's disappointing April jobs report, Mark Lehman says the U.S. is still the place to invest. And invest he does. He's got $2 billion in assets and management. JMP Securities President Mark Lehman is here to tell us why. So that number didn't spook you, that we saw a smaller than expected number for job growth in April?
It was not the headline number people wanted to see, but there were some underlying components that were decent. I think this number will be revised up. Wage growth was better than expected. It was going to slow down. We had some things, some strikes out there that obviously hurt. The energy sector is not doing well. But this has been a continued job growth, albeit not what people wanted. It's still continuing. So
would you scaffold in equities in a portfolio and keep the basic foundation in treasuries, or the other way around? Scaffold in treasuries, but keep the foundation in equities in your portfolio?
I think it's a little bit of both. I think you're going to find opportunities like we've seen over the last couple years where equities get hit disproportionately, and those are a time to leg into those stocks and that we've been talking about. And there's a time when treasuries are more worried about rate rises that have not, frankly, happened as predicted. And I think there's opportunities in both. We've had this very, very range-bound market over the last couple of years, and I don't expect that to change anytime soon.
Well, I should tell people the Dow is now up 72 points at this hour, so we had been in the red for most of the day. The bulls have come back out. Where are you most bullish right now?
I think there's opportunities in technology that we've talked about. I think the leaders of that market, specifically Facebook and Amazon, had terrific first quarters. You had an opportunity to leg in those stocks far cheaper a month or two ago than they are today. Yeah. You may have a similar opportunity in the quarter. I think the growth here domestically is with the winners. Those are the Facebook, Amazon, and Googles that we've been talking about. I don't think that's changing. Yeah,
both are up about 51% year over year. The price to earnings ratios worry me. You know, we just came from Buffett, and he says, please do not buy things when they're too expensive. Are they too expensive right now?
I think that obviously we never want to contradict Warren Buffett, but I think there's some opportunities that each of those companies has presented when there's been some worries about growth. Amazon had those worries in the fourth quarter. Facebook had some worries about what they're seeing in advertising growth. Okay. You get those opportunities rarely, but when you do, these are companies that are growing market share. The share of wallet and the share of time people are spending on these two companies is so great and accelerating. I don't think you want to miss these two stocks.
Our good friend Mark Lehman of JMP Securities out in San Francisco. Great to see you.
And Liz, most importantly, happy Mother's Day to you, and happy Mother's Day to my mother, Carrie Lehman, in Chicago.
And to your mom, too. Thank you so much. Happy Mother's Day to all of our viewers and their moms.